We round out 2017 today on a flat note, with Aussie SPI futures lower by 9 points, and our ASX 200 calling sitting at 60.75, with US equity indices predictably little changed on the day where. Clearly, today is one where we can turn the page on the year that was and continue reflecting on the dynamics ahead. 1 ASX. If we see over $2.5 billion in turnover, I would be very surprised, and from 11:30 AEDT it seems likely the market will drift into the close, but we will take a 7% year-to-date index return, 13% on a total return basis, certainly given where expectations for index returns were at the start of the year. 2-star sectors, Aussie tech and healthcare have been the two sectors which have driven the outperformance for the full year of 2017. But energy and materials have outperformed over a 3-month, 1-month and 5-day period, and this momentum factor suggests that investors and traders are happy to hold these names going into 2018. Certainly, with BHP trading at the highest levels since May 2015 and eyeing a breakthrough $30 in January, has helped the ASX 200 materials sector to push to the highest levels since early 2012, and the sector has almost doubled since January 2016. 3 Copper shining. Leads today for the materials space are somewhat constructive for today open, with copper leading the way again and pushing through $3.30, with a gain of 0.7%. What a run we have seen since the 6th of December. With price moving from $2.95, but it has almost been a perfect storm for price appreciation, although the likes of aluminum also have seen strong moves too. Global growth is undeniably strong, while China have pushed its biggest copper producer to temporarily halt production for environmental issues, and China's November copper import statistics were highly impressive too. I like to assess the power behind the underlying trend by how price reacts to moves into the 5-day EMA, exponential moving average, and as one can see on the daily chart, price has traded into, but held and closed above this short-term average every day since the 12th of December. So I am happy to stay bullish on this metal given the trend in play and hold this view until price subsequently closes below the 5-day EMA, and this same trading stance can be applied to aluminum too. 4 Gold. Outside of industrial metals and iron ore, futures have seen a strong gain, while gold is up some 0.5% and looks bullish here, where a test of $1300 looks achievable soon, despite the extended run of form. The combination of a weaker USD at a time rising US inflation expectations seen in the bond market, i.e. US 10-year break-evens, has to be seen as a positive combination for golds and wider precious metals. 5 Energy boost. The ASX 200 energy sector is up some 20% year-to-date and sitting at the highest levels since 2015, and one suspects we should see the sector round out the year following the form seen in the S&P 500 energy sector, which is up 0.03% at the time of writing. The moves in the ASX 200 energy sector this year won't shock too greatly given the bullish moves in the barrel since late June, although we are going to need to find some inspiration from somewhere to push the US crude through $60 and to form a new range of $60 to $65. Aside from pipeline explosions and Saudi budget expectations, oil traders have seen the release of the weekly Department of Energy (DOE) inventory data, with total crude inventories falling 4.6 million barrels, vs 3.8% eyed by the consensus.